Hello, mortgage fans. So after a brief hiatus, I'm back with the video version of this weekly update. The email version has gone out every week, as it has done for the last 7 years, and that's also available on our website. So if you want to catch up, very welcome to do that. But today I'm going to dive straight into it really. There's two things I want to focus on, which are one, the re-emergence of 95% mortgages, and then secondly, mortgage pricing and interest rates. So let's dive straight to it then. Last week we saw two lenders come back into the market offering 95% mortgages, broadly similar sort of offering in that they're priced around the 4% mark, and you could borrow up to about 500,000, which makes the maximum purchase price currently £526,515 if you're counting if you've got a 5% deposit. Obviously with a larger deposit you can buy larger properties and get lower interest rates. But that's sort of the starting point now. A couple of caveats which we expected are that it's going to be capped to around 4.5 times your income, and you'll need what's called a clean credit history, so no credit issues in the last 3 years. So even if you have a missed payment, it's probably going to be tough to pass the credit score. Not to say it's impossible, and we haven't tested it, but just to set expectations, it's going to be a sort of pretty clean application in order for this to go through. Now, the good thing is two lenders come back. We're still awaiting the big guys' arrival, so in previous updates, I've mentioned that the big 6 banks account for something like about 85% of all mortgages, and the two lenders that come in aren't one of those 6. So hopefully what we'll see from April onwards when the scheme formally launches is more banks coming into this space, more product choice, which will ultimately drive down pricing, which can only be a good thing. And that will also have a knock-on impact if you've got 10 or 15% deposit as well. I suspect you'll see the cost of those mortgages start to come down. But also to set expectation, it's not going to happen quickly, it's going to take months. It's not going to be a thing like we flick a switch in April and it all starts that way. So just sort of bear that in mind. But great news that if you've got a 5% deposit, you can now buy a property around the £500,000 mark. Not been able to do that really since the onset of COVID over a year ago. So it's really, really great to have that back. And as I say, more lenders coming in to follow suit as well. So secondly then was the Bank of England held their Monetary Policy Committee meeting, the MPC meeting. And they held the bank base rate at 0.1%, where it's been now, again, funnily enough, for about a year. So it's been interesting if you look at money markets regularly, as I do, because I'm a real geek on this, what we've seen with the pandemic, and I won't go into any great detail about this, but it's been really up and down as to what will happen with interest rates. There was a long period where people thought interest rates would go negative. Now, ultimately, nothing happened. It stayed at 0.1 for a year, and expectations are now that interest rates will rise in the future. If you work out the probability of this, it means that interest rates are likely to stay flat for at least 2 years, but then raise maybe 2 or 3 times over the next 5 years, so in years 3, 4, 5. That's on the chart you'll see on the email on our website, so look that up. I'll put a link into the comments if you want to have a look at all the numbers there. So it's really sort of mean then, so for a mortgage, what does that mean? You'd probably say that if you want to sort of fix for the longer term, that's starting to look like it's going to make a lot of sense. If we do expect interest rates to rise over the next, say, in years 3, 4, and 5 from here, if you can lock into historically low interest rates now, that does make sense. The one caveat is it does depend on your situation. So if you've got a smaller deposit, like we touched on before, it probably doesn't make sense. Or if you're looking at moving or something slightly more complex you want to achieve, you might not want to do that. But all things being equal, it might be a good time to sort of lock into some longer term fixed rates. So with the money market specifically all up again last week, we're seeing that again that sort of expectation on the base rate rise is sort of really moving into the money market. So look up the figures on the link as well. The best rates for a mortgage now sort of starting from 1.05. So that's again if you've probably got about 60% deposit or more, that's the sort of interest rate you can expect, going up to probably the other end of the spectrum. The 95% mortgages at 4%. So depending on your situation, depending on your level of deposit, you'll be somewhere on that spectrum. So that's it for our weekly update. As I mentioned, the full update will be linked below, and it's also on our website for more information. Great to see you back.